And a very good Friday morning to you, live from London. This is Bloomberg Daybreak Europe. I'm Chad Thomas, and here are your top stories. Global bonds under pressure as a promised new fiscal plan from Treasury Secretary Scott Bessent fails to stem rising U.S. borrowing costs. Aiming for the sky, Bloomberg learns that Anthropic expects to match or beat SpaceX's record IPO size as it prepares its own Blockbuster listing for takeoff. And Germany's industrial machine stalls under pressure from rising energy prices and Chinese competition. We'll take a deep dive into the challenges facing Europe's largest economy. Now let's take a look at what's happening on the markets this morning. Asian stocks getting a little lift at the end of the week, led by gains on the tech-heavy Kospi in South Korea. Samsung Electronics climbing as much as 3% this morning. Europe and U.S. futures up a tad this morning as well. Investors will be watching on both sides of the pond for any clues they can garner from those flash PMIs we'll be looking for later today. All right, now let's take a look at the cross-asset picture. Brent crude holding steady this morning around $94 a barrel, just under that, after posting gains throughout the week on continued concerns about the situation, of course, in the Middle East. Japanese bond yields rising overnight following the increases we saw stateside, and Treasuries holding steady this morning after yesterday's jump in yields that erased much of the drop we saw following Scott Bessent's surprise announcement Wednesday to increase those buybacks. And now let's take a look at some of the key events we'll be watching throughout the day. We'll be looking out for UK retail sales. That's at 7 a.m. local time. Then at 8:15 UK, France will kick off a series of flash PMI prints from across Europe's largest economies. And at 2:45 p.m. UK, we'll get the PMI data from the US. Lots to get to this morning. Let's get started. Bond pressure continuing to hit markets across the globe this morning. Let's get a check of the overnight action in Asia with Winnie Su in Hong Kong. Winnie, what's it look like there?
Yeah, good morning, Chad, and happy Friday. Well, it is quite a reversal from what we saw yesterday, right? Because now we have Asia bonds tracking U.S. Treasuries lower, and you are seeing yields really across the region from Japan to Australia to New Zealand are all ticking higher. Now, that is as investors grow more skeptical in terms of how the U.S.'s effort is going to be paying off when it comes to lowering that long-term borrowing cost. Now, flip the board and we take a look at the Korean assets because we are seeing Korean stocks leading Asian stocks higher with the Kospi here up 0.8%. Now, lots of optimism coming through after Samsung Electronics' plan on this shareholder return of up to $79 billion. We will be awaiting for more details to come later in the board meeting that is scheduled for 4 p.m. Seoul time. And the attention really will be on how the company will be able to allocate their funds between buybacks and dividends. Now, that plus what we have already heard from SK Hynix in terms of their buyback plans are supporting the Korean won here, strengthening by almost 1%. And that is as investors are more optimistic about how these exporters will be able to bring their dollar earnings back home. And we see that the Korean won is in fact the best performing currency today in Asia, as well as the best performing one so far this month. Now, flip the board, we also take a look at the rest of the market because with Korean stocks gains, we are seeing the MSCI Asia here up 0.7%, rising for a second day. However, we are seeing some other weaknesses in the other areas of the markets, specifically highlighting Alibaba here down almost 3%. It is the biggest drag in Asia markets today, and that is coming after quite weak earnings overnight. Now, we are hearing profit falling about 75% with capex at $10 billion. So lots of concerns when it comes to that massive AI spending, although the bright spot is around how the company is seeing an acceleration in its cloud revenue growth. And Japanese market here also down as the higher yields continue to raise concerns, while the yen holding just around that 159 level level against the dollar. We did have that hot CPI print from Japan earlier today, seeing core CPI accelerating for a second month. That is also raising bets when it comes to the Bank of Japan having to raise rates earlier. Back to you, Chad.
Bloomberg's Winnie Xu with the latest for us from Hong Kong. Bloomberg understands that Anthropic expects to match or beat the size of SpaceX's record-setting $75 billion IPO. The cloud developer is said to be running the numbers as it prepares to file publicly as soon as the end of this month. Well, let's get more on this from Bloomberg's Anthony Stevens. Anthony, what's the latest from Anthropic ahead of this mega IPO?
Yeah, Anthropic continues to barrel towards this IPO coming after the strong ARR numbers that it released, about $65 billion. And now it's targeting something in the realm of SpaceX. So that puts it in the 1 to 2 trillion kind of valuation range. And the size of the IPO is in and around this 80 billion mark that SpaceX had, including the over-allotment option. Now it's added another banker to its roster with Citibank coming on board. Citibank was part of the SpaceX deal. And what's very interesting here is the structure of this deal, right? We have Anthropic management looking for super voting shares. So that's one aspect. The second aspect is that this company has been able to raise capital relatively easily in the credit markets with the $10 billion revolving line above what they were expecting. So as long as the revenue continues to grow at the pace it's growing, the market does not seem to be concerned on profitability just yet. Remember, this company lost $40 billion in 2025, which was a big jump on 2024 numbers. So this company has to turn around to profit later, but as it moves into positive net adjusted income, investors are looking at the pure growth rate, and it looks like there is a lot of fervent demand for this IPO. Now, bear in mind, this is going to be the biggest listed LLM play after the Chinese had Minimax and Zhepu earlier. So how much space will investors have to make in the rest of their AI portfolio to buy this IPO? Now, that's going to be another factor that's really in focus in the next coming weeks.
And Anthony, Broadcom is in these debt deal talks. What can you tell us about that?
Yeah, that's another aspect of this competition for capital, right? You have all these AI deals coming at the same time, whether it's in the equity capital markets with Anthropic and now with this Broadcom deal. So the Broadcom deal is interesting in that it's another deal where these chip makers who are making money today are putting their balance sheets on the line to help their customers bridge financing into the future. So it's very expensive for the likes of Anthropic to build out a data center supply, right? And as a result, Broadcom is helping Anthropic, amongst others, to build out this data center supply in partnership with US private equity players. So this private equity partnership with the chip makers is a relatively new thing. NVIDIA also did something very similar. So it'll be interesting to see how the market takes that. Now, Broadcom's CDS has been worsening recently as the market is a bit concerned that it's gone from being a pure chip player to kind of an AI fundraising player. So whether the market understands this transition and is willing to play ball will be interesting when the terms of this transaction come to market.
Bloomberg's Anthony Stevens for us in Hong Kong this morning. Thank you, Anthony. Treasury Secretary Scott Bessent says he's ready to expand his debt buyback push and that the U.S. government will unveil a new fiscal initiative to address borrowing costs. Longer end bonds reversed course in Thursday's session, giving up much of the gains triggered by the Treasury buyback announcement. But Bessent said he isn't concerned.
Anything that happens within a 24-hour period is noise. And, I think that once the market understands that we are focusing on fiscal consolidation and that we are trying to bring the market back into equilibrium in a thinly traded market.
Let's bring in Ven Ram, cross-asset strategist at Bloomberg M Live. Ven, is there anything Bessent could announce that would meaningfully ease this bond market pressure? We've had quite a wild ride this week.
Morning, Chad. I think that he's got a couple of things that he could unveil that could provide some salve to the market in the very short term. He's likely to point to deficit savings. He's planning to cut some spending for some states and things like that. So they, at the margin, they may find a couple of $100 million here and a couple of $100 million there. But the big question remains, what is the overall trajectory of the U.S. fiscal deficit? And is it going to meaningfully come down for the bond markets to say, you know what, we don't need to be vigilant about the debt levels to an extent that we have been obsessing about. And also, he's going to double the buybacks, which is already known, but he seems to suggest that it could be even higher than the $4 billion that they already announced. So all in all, it's going to provide some temporary relief, but nothing more than that, because if you look at term premiums, and that is the crucial component here. If you look at the term premiums, over the past 5 years, they have soared from basically 0 basis points to 80 basis points. And that is the extra that investors want to are demanding to hold longer dated treasuries. And as long as the term premium stays high, all this jiggery-pokery around the margins about fiscal deficit is not really going to help the case of investors shunning duration.
And Ben, we've just spoken about another big AI debt offering from Broadcom. How big of an impact is this tech issuances that we've seen on government bonds?
Well, I think it's going to be a continually dragging factor for government bond yields, because they have, we've got this plethora of issuances coming from the AI-related space, and because that's all projects with long gestational period, I mean, typically this bond raising is going to go on for a few more years as I see it. So I think we are still in the beginning of the AI-led spending, capex spending, and that's going to continue. So the competition for funds is going to be quite immense in the coming years, and therefore I think that the pressure is going to be on the higher end for longer dated yields to bob higher.
Ven Ram from our Bloomberg M Live team. Thank you, Ven. Still ahead, Germany's economic troubles are adding to the political stakes ahead of next month's regional elections, where the country's far-right party is poised to make significant gains. We'll discuss these challenges. But first, the U.S. prepares to unveil details of what President Trump has called economic D-Day for Iran. That's next, and this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The Trump administration is preparing to unveil its campaign to economically isolate Iran on Monday. Treasury Secretary Scott Bessent is promising what he calls the most coordinated pressure effort yet. The strategy could extend beyond Tehran to countries that continue trading with it. Well, let's bring in Abir Abu Omar, Bloomberg Horizon's Middle East and Africa anchor. Abir, Iran is used to sanctions. Is there anything the U.S. can do at this point to have a meaningful impact?
Good morning, Chad. Well, we'll have to wait for what Scott Bessent announces on Monday. He did tell CNBC yesterday that this economic isolation plan, the intricacies of that, would be announced on Monday. So we'll have to see what exactly the U.S. is going to do. But according to a lot of analysts that Bloomberg has been speaking to, one, Iran is used to these circumventing sanctions. It is the most sanctioned country, of course. And then the U.S., they believe that the U.S. does not have the bandwidth to enforce an airtight sanctions regime. And then maybe I run you through what the Iranian response to this has been, of course, through the foreign minister Abbas Araghchi, who said that, first of all, the Iranian regime rejects economic threats made against his country. And then he says that such, quote unquote, failed policies will stir more hostility among Iranians and bring more failures. And so it's not really clear how effective further sanctions are going to be. I mean, the U.S. did not remove the oil sanctions, or remove the oil sanctions for a period of time after the MOU was signed, and then brought them back through the Treasury Secretary. One big element in all of this, Chad, of course, that remains is how China would be affected. Now, China is the biggest buyer of Iranian oil, about 90% of it, as a matter of fact. And the U.S., at the start of all of this, did sanction independent Chinese refineries, but it stopped short of sanctioning banks that are in charge of financing those deals. And so we wait to see if that could play into it, and that would, of course, bring in another headache to the United States, potentially bringing in yet another tariff war, and that would be quite a contentious time, of course, especially with Xi Jinping visiting Washington next month. And so we wait and see. Again, you're seeing Brent crude not really reacting to the plateauing sense of what is happening in the Middle East, or it's a little bit lower this morning, of course, headed for a weekly gain on the back of everything that we saw happening throughout this week. But then again, maybe it gives a glimpse of just what markets are bracing for, and that is wait and see for what Scott Bessent decides to announce later on Monday when it comes to this wider economic isolation goal that the U.S. has against Iran.
And Abir, do we have any idea at this point how much oil is actually getting through the Strait of Hormuz? I know we've been talking about this a bit this week. It's really hard to know because these vessels are going dark, but I'm just curious if there's any indications there at all.
Yeah, so lower than what we had seen in the aftermath of that MOU was getting signed. Over the past couple of weeks or so, Chad, really a trickle of movement is able to make its way through the Strait of Hormuz. And that's not to say that it's able to make its way through the Strait of Hormuz unaffected, because we're still reporting some attacks that have been happening. Earlier this week, we reported about 3 Chinese flagged tankers that had stopped idle. We reported last weekend about 2 ADNOC flagged ships that were hit. We are reporting about energy infrastructure being hit, so it's not just the Strait of Hormuz. But when it comes to the Strait of Hormuz itself, it is a trickle, if it's a fraction of what it was pre-war levels, and it's gone lower even throughout the past few weeks. So what our energy teams have been reporting is that any ship or any vessel that is able to make its way through the waterway is choosing to go with its lights switched off, that is switching off the transponders essentially to be able to go through the Strait of Hormuz. So we don't have a way of figuring out just how much exactly of this oil is making its way through. But according to a lot of analysts, again, when pre-war we used to see about 20 million barrels of oil or so cross its way through the Strait of Hormuz every single day. Right now, a good estimate is at about 2 million barrels. And so that is a 90% drop and quite significant, of course. And it's not just the Strait of Hormuz, Chad. You, of course, remember the Red Sea is now prone to those attacks by the Yemen-based Houthis, of course, a militia that is backed by Iran that has been targeting Saudi Arabia and its export hubs.
Abir, thank you so much. Bloomberg Horizon's Middle East and Africa anchor, Abir Abu Omar. And now to some other top stories we're following this morning. China and Switzerland have agreed on a trade deal that almost entirely removes tariffs on Swiss exports. The Swiss government says its investors will also get better access to the Chinese market. It comes as Beijing tries to deepen ties in Europe amid its ongoing rivalry with the U.S. for global influence. 6 European governments and Canada are urging Israel to withdraw its latest plans to expand settlements in the occupied West Bank. In a joint statement, the leaders called the plans unacceptable and warned companies against bidding on the construction tenders. They say the expansion would take the region further from peace and undermine Israel's international standing. British consumer confidence has risen to its highest level since Labour took power 2 years ago. GfK says its sentiment index climbed 3 points to minus 14 in August and has surged 9 points over the last 2 months. That takes confidence back to the latest level seen in August 2024. Now, coming up, Monte Paschi launched their separate bids for Banco BPM and Banca Generali. We'll get more on this breaking news story on the Italian banking center up next. And this is Bloomberg. And welcome back to Bloomberg Daybreak Europe. We have some breaking news now in the Italian banking center. Monte Paschi offering to buy Banco BPM and Banca Generali in all share deals. Paschi is offering at a value of $25.3 billion for Banco BPM, and the Paschi offer for Banca Generali offers values that at 8.7 billion euros. Let's get more on this breaking news story now from Bloomberg Southern Europe managing editor Tommaso Ebhardt, who's joining us from Milan. Tommy, this was a story that we actually broke last night. What are we learning now from the statement that just hit a couple of minutes ago?
Sì, buongiorno, Chad from Milan. We are actually on the news. The statement hit a few minutes ago, confirming what we heard from sources last night. So essentially, Paschi CEO Luigi Lovaglio is going ahead with an alternative plan to Intesa bid. The plan includes two separate all shares offer for Banco BPM, its main rival after Intesa and Unicredit in Italy, and for Banca Generali. Banca Generali is the wealth manager of Assicurazioni Generali. It's an all-share deal. If I'm reading correctly, it looks like there's not a huge premium that Paschi is offering on Banco BPM and Banca Generali, especially on Banco BPM. If we look at yesterday closing prices, and to make more appealing the offer, the CEO is also coming with a 4 billion euro extra dividend for Monte dei Paschi investor, partly in cash and partly in Generali shares which Monte dei Paschi owns.
Tommy, take a step back here for a second and remind us how we got to this point. Why is he making these bids for these two banks?
Yeah, let's try to make this simple. Essentially, Luigi Lovaglio managed to revamp Monte dei Paschi since he was named in 2022 by Draghi's government. At the time, Monte dei Paschi was nationalized and now is a healthy bank. Last month, Intesa Sanpaolo made the bid to buy Monte dei Paschi, and with the acquisition, essentially the Monte dei Paschi branch will be divided in two. Half to Intesa will go to Intesa Sanpaolo and half will go to Unipol and to merge with another Italian bank, Banca Popolare dell'Emilia Romagna. Monte dei Paschi CEO doesn't want this plan to go ahead, doesn't want the bank that he managed to turn around to be dismantled, so he's coming with an alternative plan. This is his alternative plan. It's an aggressive plan in terms of acquisition of two separate banks. Obviously, it's a bold move because he needs a lot of approval and investor support to get it done.
Bloomberg's Tommaso Ebhart joining us in Milan on the breaking news. Thank you, Tommy. Happy Friday to you. And now to some other corporate news. A trade body representing UK banks has reportedly warned the government against increasing taxes on the sector. Sky News says a letter from UK Finance said increasing levies could undermine the country's tax base and damage its international competitiveness. Well, Bloomberg has learned Deutsche Bank is making a major push to rebuild the energy trading business more than a decade after largely exiting commodities. We're told it's hired senior traders and sales executives from Goldman Sachs and Morgan Stanley. The bank says the investment is focused on energy market making rather than a full return to commodity products. Well, let's take a quick look at what's happening with the markets this morning. Asian stocks up a little bit at the end of the week here, led by gains on the tech-heavy Kospi in South Korea. Samsung Electronics helping lead that gain, climbing as much as 3% this morning. Europe and U.S. futures up a tad this morning as well. Investors will be watching on both sides of the pond for any clues they can garner from the flash PMIs that are coming later today. Let's have a real quick look at the cross-asset picture now. Brent crude holding steady this morning around $94 a barrel after posting gains throughout the week on continued concerns about the situation in the Middle East. Japanese bond yields rising overnight following the increases that we saw stateside. Treasuries holding steady this morning after yesterday's jump. Well, coming up, we'll be looking ahead at those European PMI data this morning and what we can expect from the ECB as a result. This is Bloomberg. And a very good Friday morning to you, live from London. This is Bloomberg Daybreak Europe. I'm Chad Thomas, and here are your top stories. Global bonds under pressure as a promised new fiscal plan from Treasury Secretary Scott Bessent fails to stem rising U.S. borrowing costs. Aiming for the sky, Bloomberg learns that Anthropic expects to match or beat SpaceX's record IPO size as it prepares its own Blockbuster listing for takeoff. And breaking news, Monte Paschi launches simultaneous offers to buy Banco BPM and Banca Generali in a bid to fend off a takeover from Intesa Sanpaolo. Now let's take a look at what's happening on the markets this morning. Asian stocks getting a bit of a lift at the end of the week, led by gains on the tech-heavy Kospi in South Korea. Samsung Electronics climbing as much as 3% this morning. Europe and U.S. futures, little changed this morning. Investors will be watching on both sides of the pond for any clues that they can garner from the flash PMIs that we're going to have a bit later today. Let's take a look at the cross-asset picture now. Brent crude holding steady this morning around $94 a barrel after posting gains throughout the week on those continued concerns about the situation in the Middle East. Japanese bond yields rising overnight following the increases that we saw stateside. Treasuries holding steady this morning after yesterday's jump in yields that erased much of the drop that we had seen following Scott Bessent's surprise announcement on Wednesday to increase those buybacks. Well, Euro area PMI data this morning will provide an indication of whether the strong momentum in GDP growth in the second quarter carried through into the third. Let's get more on this from Bloomberg's Western Europe editor Zoe Schneeweiss, who also runs our coverage of the ECB. Zoe, what are we looking for in the numbers this morning?
Good morning, Chad. The number, as always, that we'll be looking for is 50. Anything below 50 is contraction. Anything above 50 is growth. We get three numbers. We get French numbers, and then we get German, and then we get Euro area. On the French numbers, France, as we know, has been doing quite poorly and has been under 50. And with the composite number for the PMIs, we're expecting France to stay there. Germany and the Euro area both are quite comfortably above the 50 threshold, and we'll be looking at that. Beyond that, we will be looking at anything that they say in the PMI numbers on price pressures. We are obviously ECB, we're here in Frankfurt, we're ECB watchers. Anything that shows that those inflation numbers, and we know inflation is above 3%, that is that number that we worry about. How does this feed through to other areas? Anything on second round effects and PMIs, as we know, purchasing managers, any second round effects purchasing managers are seeing are the things we're looking out for, and how that would influence ECB policy.
And Zoe, where do things stand in terms of what are people thinking in terms of what's going to happen at the next ECB meeting at this point?
At this point, everyone is very much counting on a rate hike. As you remember, we already had one in June, those 25 basis points. Now in July, they stood still. And now in September, we're expecting another 25 basis points. Overall, what allows them to do this is that the economy generally is quite resilient. Everyone's been surprised how well the Euro area economy has withstood those pressures we're getting from the war in Iran. And at the same time, we have those elevated inflation numbers. So that in combination means the ECB will have to hike.
Bloomberg's Zoe Schneeweiss joining us this morning from Frankfurt. Thank you, Zoe, and happy Friday to you. Well, fierce competition from China and high energy costs are just two of the reasons Germany's once renowned industrial machine has stalled. Bloomberg's weekly doc takes a deep dive into the challenges the nation is facing.
Europe's biggest economy has a bit of a crisis on its hands.
The economic model is not working anymore.
Germany was the largest exporting nation on the planet.
And now it very much isn't.
Big companies announce restructuring programs, closing factories, closing plants, laying off workers.
Now, historically, Germany's economic story was one of almost uninterrupted growth. But that changed in recent years when a post-pandemic rebound turned into a contraction and the economy began to stagnate.
There is little doubt that the German industry, especially the energy-intensive sector, has been in crisis for years.
And the effects are reaching jobs and industrial communities. Economic anxiety is also pressuring politicians. So what's behind Germany's industrial crisis? And why do some experts think it's running out of time to fix it?
It's a moment in history. When you don't act now, Europe or Germany might be as well a huge open-air museum.
Subscribers can watch that documentary in full right now on the Bloomberg terminal and at Bloomberg.com. Germany's economic challenges are thrown into sharp focus with regional elections looming next month, in which the far-right AfD is expected to make major gains. Well, for more on this, I'm joined by Christoph Rawald, Bloomberg's Germany bureau chief, and Michael Nienaber, Bloomberg's political reporter in Berlin. Good morning to both of you. Christoph, I want to start with you. Germany is facing a squeeze on many sides: higher energy prices, tariffs from the U.S., increased competition from China. How serious are all these challenges to the country's economic model?
I would say they're very serious, actually. You mentioned some of the adverse factors, which are structural challenges. It's not something that would essentially go away overnight. The high energy costs have already been mentioned, high labor costs, plus also the economic model as such, which is very export-oriented, has been facing very enormous challenges. For specifically the weakness in the Chinese market, which is a very important export market for many parts of key industrial sectors in Germany, has weakened. The competition, therefore, for economic goods like cars has massively intensified. So the challenges will very much remain in place, I'd say.
And Michael, what is Chancellor Merz's government doing to address all of this, and do you think they're moving fast enough?
Well, when Merz's coalition took office roughly 15 months ago, they actually did a lot of things. They launched a 500 billion euro debt finance infrastructure fund, so a lot of state investment planned there and in the pipeline. They also basically abolished the borrowing limits for defense spending. A lot of this defense spending is now going to European and German defense manufacturers, normally guaranteeing a domestic economic push. But with the German economy actually being more a tanker than a speedboat, that actually takes time. And all the other measures that the coalition government of Merz is doing, like cutting red tape or reducing hurdles to pull in private investment, are actually seen as too little too late to actually help turn around the corner. And given that the external shocks are so immense, you mentioned the tariffs from the US, the competition from China, German voters are actually losing patience, especially with Merz always demanding or telling German workers they need to do more, suggesting they're basically lazy. This is not going down well when he's now basically 4 weeks off the political agenda, taking summer holidays. So he's now a bit in the political defensive, and it's not looking very well in the state elections coming up next month.
And Christoph, Germany has been through these economic crises before. You and I have been covering them together for many years, and they always manage to pull out of it somehow. But is there a sense that the model just isn't working anymore for Germany, and that this isn't cyclical as such?
I think it's a very good point to address. I think the economic model, when it comes to this, what we discussed before, the sort of export-oriented sectors, that has been under challenge. And I think, as our colleague Martin Ademer from Bloomberg Economics mentioned in the trailer earlier in the program, specifically the energy-intensive sectors, they face massive disruptions, essentially, because there is no reason to believe that the picture for these sectors specifically will dramatically change. Energy costs will remain high or very high. So I think it's fair to say that at least parts of the German of the German economic model are really changed and will need to be transformed in order to really pull off this economic recovery, which seems to be more of like a gradual recovery if it does firm up in coming weeks and months, rather than a speedy sort of like recovery or bump back.
And Michael, you were traveling in the eastern state of Saxony-Anhalt yesterday. There, of course, is this election there in just a couple of weeks where the far-right AfD could win an outright majority. What was the mood that you were picking up on the ground there?
Yes, I was following the Social Democrat Party co-leader Lars Klingbeil, who was finance minister in Merz's ruling coalition here in Berlin. And basically, I was there at several events, and there were just like a dozen actually voters being interested in him. And this actually shows that actually the focus of many citizens in Eastern Germany and Saxony-Anhalt is at the far-right AfD party. There's huge disappointment with the centrists, the ruling parties. Unemployment in the East is much higher than the national average. Also, the economy in Saxony-Anhalt is not doing well. So it looks like that the far-right AfD, whose regional chapter basically, or actually is described by the Domestic Intelligence Agency in Saxony-Anhalt as a confirmed far-right extremist party, might not only win the election, but get so many votes that it actually could, for the first time, rule one of the 16 states. And this is viewed as not only a political upheaval, but also actually a threat to the established democratic order and the system here in Germany.
And Michael, if the AfD were to win in this eastern state, what does that mean at the federal level?
Well, with the German Republic being a federal system, for example, the 16 states are exchanging sensitive intelligence and state secrets. So there's the concern, if the AfD should win enough votes and get an absolute majority and actually form the regional government in Saxony, there are concerns that it get access to sensitive information that it might pass on basically to foreign powers like Russia, an accusation which the AfD is rejecting. But the authorities are actually already now taking precautions, are discussing steps how to basically erect a firewall around certain intelligence information and ring fence sensitive data so that an AfD-led regional government is not able to access those sensitive information, not able to pass it actually on to foreign powers.
Bloomberg's Michael Nienaber and Christoph Rowell joining us this morning. Thank you both for your insights. Well, we want to return to our breaking news on the Italian banking center, that joint bid, double bid that Monte dei Paschi made for Banco BPM and also for Generali. Generali gaining 10.3% on TradeGate in early trading this morning. Banco BPM also gaining 3.3%. Monte Paschi down 3.6% on TradeGate. On that breaking news that just came out a few minutes ago here in Europe. So coming up, we'll head east from Germany as Poland looks for a new growth model as political pressure mounts. We'll dig into the country's economic outlook next, and this is Bloomberg.
The only way for Afghanistan to stand tall, provide for itself, and do well is through an educated population. We cannot imagine progress any other way but through education. And for that reason, during my time in office and today, I call for education for the Afghan people, especially for women and girls.
And when you say this in your dialogue with the Taliban, what is the response?
Those who come and meet me, those who talk to me, they are of the same opinion as I am.
Former Afghan President Hamid Karzai talking to Michelle Hussein in the latest episode of the Michelle Hussein Show. Well, you can watch the full exclusive conversation on Bloomberg.com/videos or listen wherever you get your podcasts. Switching focus now, Poland has been invited to the G20 later this year with its economy topping $1 trillion. It's gone from communist backwater to dynamo of the European Union, but is now looking for a new economic model to power its next stage of growth ahead of parliamentary elections next year. Well, let's bring in Bloomberg's Warsaw Bureau Chief, Zosia Wanet. Zosia, Poland is a positive story for the EU, so why does the economy now need to change?
Yeah, thank you, Chad. So, as you said, Poland has been one of the EU's most prominent economic success stories. And over the last 30 years, it has recorded almost uninterrupted economic growth. And you mentioned all these things like crossing the $1 trillion GDP mark, going to G20 meeting later this year. All these signs, they show that the Polish economy has been maturing. And this growth has been driven by many factors, but some of the most important are the reliance on the massive EU structural funds, but also the fact that Poland has had access to relatively cheap and skilled labor. And today, these labor costs, they've been growing rapidly, and Poland will soon have to stop relying on EU funds. So this economic model is just not sustainable anymore. So that's why the government is looking to shift the economy towards more sophisticated investments in industries such as AI, new technologies, electric vehicles, and also their supply chains, such as metals.
And Zosha, how is the country faring in terms of its foreign direct investment?
Yeah, so I think the FDI situation sort of reflects that strategy. So for years, foreign companies they've sort of seen Poland as this place where they could open their back offices or like simple assembly lines. And they have been attracted by, as I mentioned, cheap labor costs or like tax incentives. But now the government is very clear that they don't care that much about the value of investments that are coming or the sheer fact of these investments. They care about the quality of the investment. So what they want to see is more investment with technology transfer or with the know-how coming to Poland and to Polish employees. And I think the last two recent announcements of foreign investments underpin the strategy very well. So one of them is Lumina. This is the company that we've been writing about in the story that came out this morning. So Lumina is the Canadian silver and copper mine, and they are planning to spend $6.4 billion in Poland in the next decade. They want to build their mine in Western Poland, but with this mine, there comes this promise of building like the whole ecosystem, copper/silver ecosystem in that region that would really elevate the region, and that could really help to put Poland on the as a major player on the global copper market. And then there is another example of the Taiwanese firms, including Foxconn, that are planning to build a technology park in Western Poland that would sort of be set up of different companies that would potentially produce automotive electronics, AI server components, industrial robots, semiconductors, so all these sort of high-tech products. And this proposal could be worth as much as $20 billion. And
Zosha, far-right groups have been gaining traction ahead of the election that you'll have there next year. There's also this lingering threat from Russia. How does this factor into what's happening?
Sure. So, I mean, these are all very real risks. But when it comes to the threat from Russia and the fact that Poland neighbors Ukraine, I mean, out of the conversations that we've been having with many CEOs, we sort of understand that this risk has already been sort of priced in, and the investors, they sort of got used to the situation here. On top of that, very often when they want to access the Ukrainian market, they really see Poland as a go-to place to invest, right? Because this is like the market the closest to the war, which is not at war itself. So this is one thing. And then you also mentioned the rise of the far-right groups in Poland. This is true. They are really gaining traction ahead of the next year elections. So So, well, on the one hand, the far-right groups in Poland, they tend to be sort of pro-business. So they, like they opt for things like deregulation or cutting taxes. So this sounds like a good news for businesses coming here. But at the same time, I mean, obviously there are many risks involved. One of them is the legal uncertainty, so like the future of the rule of law. And the other one is a potential curb on migration. Poland is the country with one of the most severe demographic crises in Europe. So companies coming here, they really have to see whether they would have enough hands to work, and curbing migration or stopping migration, limiting that in any way, which very often is in the programs of far-right groups, this could be problematic for the future.
Zosia, thank you so much for joining us. Bloomberg Warsaw Bureau Chief Zosia Wanet. Well, we want to return to our breaking news story this hour. Monte Paschi's launched simultaneous offers to buy Banco BPM and Banca Generali in a bid to fend off a takeover by Intesa Sanpaolo. Banco BPM moving higher on TradeGate, insurer Generali, parent of Banca Generali, also making gains as Monte Paschi loses ground. Well, we'll be taking a look at terminal charts coming up after the break. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So let's take a look at our first chart this morning that illustrates the pressure that U.S. long bonds are under. So that first factor is the huge AI build-out that is putting pressure on the bond yield across the board, and we can see that here in our chart. Another big factor, of course, is the ballooning U.S. debt, which hit $40 trillion this week, with no indication that these figures are going to stop rising. Looking closely at the chart, we can see that the 30-year yield has climbed steadily over the last 2 months. Let's take a look at the second chart, and that's at the point where the long and end bond yields are climbing across the board. We can see along with the U.S., the UK, Japan, and Germany have also been climbing steadily, basically for the last 5 years. Germany, which is still paying the lowest of the yields here, we can see at 3.75%. That's the highest still in well over a decade. Well, the opening trade is coming up next with Tom, Guy, and Skylar standing by. That's it from us here at Bloomberg Daybreak Europe. Thanks for joining us. Have a great weekend. This is Bloomberg.